Every legend begins with an unnoticed start, with a small spark. Today we will go to the moment that first spark ignited, to the unknown first steps of Warren Buffett, whom the whole world knows as the Oracle of Omaha. But this is not a guide on how to get rich. This is the origin story of a mindset, a passion, and most importantly, a discipline. Because the man who manages a trillion-dollar company today has actually never changed. He is still that child, selling newspapers on the streets of Omaha in the summer of 1942, keeping track of every penny. Our story begins in the America of the 1930s. In the shadow of the Great Depression, Warren's father Howard was a stockbroker, and the 1929 crash had shaken the family deeply. Little Warren observed in his father's office how people sold their stocks in despair, how the market turned into a fear machine. But what awakened in him was not fear, it was curiosity. There had to be an order within this chaos, a logic behind these ups and downs. And that first passion emerged when he was just 11 years old. He was reading magazines full of financial data like The World's Future, recording stock prices, drawing charts. But theory was not enough. It had to become tangible in his hands. In 1942, at the age of 11, he made his first stock purchase by partnering with his sister Doris. Yes, that famous first investment. It was the company City Service Preferred, 3 shares at $38 per share. Together with his sister, each had put up half of the $114. So why was this choice important? Because Buffett, even at that age, was trying to understand a company's business model. City Service was an oil company. Oil meant the future for that era. However, we were looking at a genius who was not yet mature. The stock price fell. It declined from $38 to $27. Little Warren experienced unbearable stress because he was about to lose his sister's money too. Unable to be patient, he sold the stock as soon as it rose to $40. He had made a profit, yes, but what happened afterwards became a lesson for him that would last a lifetime. The City Service stock soared to $80 shortly after he sold it. That sale, that small disappointment experienced by a child in Omaha, shaped one of the cornerstones of modern investment philosophy. That little child learned the word patience here. On that day, Warren did not just sell a stock. He sold the value of time. He understood that for a short-term profit, he had given up a long-term fortune. This was the first painful experience of his phrase, "My favorite holding period is forever." So what did he do after this first experience? He did not give up. On the contrary, he became more systematic. He now focused not just on stock prices, but on understanding the fundamental value of companies. This led him to Benjamin Graham's book, The Intelligent Investor. Graham was not just a teacher for Buffett. He was like a master. His value investing philosophy made lightning strike in Buffett's mind. When a company's market value falls below its real value, that is an investment opportunity, just like buying a quality product on sale. However, Buffett's genius leaped to another dimension here. Graham only looked at numbers, balance sheets, and pursued steady profit. Buffett, during his education at Columbia University, began to go further than his teacher. According to him, just being cheap was not enough. That company had to have an understandable, sustainable competitive advantage. That is, it had to be surrounded by a moat. This moat could be a brand. It could be a monopoly like a local newspaper, or it had to have a reputation for quality that lasted for generations. Here lies Buffett's second great unknown turning point, the meeting of quantitative genius with qualitative genius. He could read companies like an accountant, but at the same time like a psychologist. He could also analyze a company's culture and its place in the customer's mind. So what does this historical and disciplined journey tell us, the small investors? The first and most important lesson to be drawn from Buffett's story is this: investing is not a race with your intelligence. It is a marathon you run with your discipline and patience. Buffett's first mistake at the age of 11 is actually the mistake of impatience that we all make. The market offers us a price every day, even every minute. This seems like a game, a bet, but Buffett teaches us this. A stock is the ownership right of a real business with factories, employees, a brand, customers behind it. You buy that business, you must expect to grow with it. Just like planting an acorn and waiting for it to become a forest, no one plants an acorn and expects it to become a tree the next day, but in the stock market, people try to do exactly that. The second great lesson is, stay within your circle. Buffett never forced himself to invest in technology companies he did not understand, or in fashionable sectors. He understood insurance, banking, journalism, confectionery, soft drinks, and focused only on them. This is a sign of wisdom, not arrogance. In today's world, among hundreds of opportunity noises every day, staying within your own simple, understandable circle can be the greatest power. The second great lesson is, stay within your circle. Buffett never forced himself to invest in technology companies he did not understand, or in fashionable sectors. He understood insurance, banking, journalism, confectionery, soft drinks, and focused only on them. This is a sign of wisdom, not arrogance. In today's world, among hundreds of opportunity noises every day, staying within your own simple, understandable circle can be the greatest power. Therefore, Warren Buffett's story does not give us a magic formula. It gives us a mindset map. That journey that began in Omaha is not just the history of money, but also the history of a thought system. This system is built on learning from the panics of the past, not getting caught up in the noise of today, and patiently waiting for the value of the future. Buffett saw his own life as his best investment, and we can do the same. The first step begins with curiosity, just like that 11-year-old child did. The second step is shaped by learning from mistakes, just like that young man experienced, and the final step is crowned with a discipline that will last a lifetime, just as that man showed. Understanding this mindset map perhaps allows us to understand his greatest investment decision. Warren Buffett spent most of his life on never splitting the shares of his own company Berkshire Hathaway, not paying dividends, and investing every cent he earned into the next wonderful opportunity he saw. This requires incredible self-confidence and responsibility, so where do its roots? Perhaps in the regret that 11-year-old child felt for selling his city's service stock early. From that moment on, he made a promise to himself to hold on to an asset he found right until he died. This was not just an investment strategy, it was a character choice. Other great capital owners in history like Renaissance bankers, industrial tycoons, established complex systems to grow and distribute their wealth. Buffett's system was surprisingly simple. Find a wonderful company, pay a fair price, and without any criticism, let it work for you. This patience is like an ancient virtue challenging the speed of the modern world. Therefore, his story is not just the story of an investor. It is the story of a time engineer. He used the most basic function of money, storing and transferring value over time, in its purest form. By applying the lessons learned from the panics of the past with the discipline of today, he managed to transfer tremendous value to the future. In conclusion, the lesson to be taken from that child in Omaha is not which stock to buy. At its core, it is how to manage your own internal market, building a moat against the sudden fluctuations of your emotions, growing your knowledge base by constantly reinvesting in it, and protecting your most valuable asset, your time, from the haste that kills it and combining it with the patience that multiplies it. Buffett's history shows us that financial freedom lies not in complex formulas, but in the deep belief application of simple principles. And this journey, just like his, begins on that first day, with that first experience, when you don't have much to lose yet, but have everything to learn. If this in-depth historical journey and financial wisdom inspired you, please like this video and subscribe to the History of Money and Finance channel for more. Do not forget to turn on the notification bell to be informed about our new content. Write in the comments, in your opinion, in today's fast world, is it still possible to apply Buffett's hold forever patience? I am very curious about your views.